Boom shakalaka, despite collapse foreshadowing a recession, Bitcoin is still proceeding as usual. Stay tuned to find out why this is great for you. Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video we have a lot of very interesting charts for Bitcoin and cryptocurrencies, including why things just look terrible and why Bitcoin still looks pretty darn good. Before we get into it, guys, make sure to like, subscribe, click the notification bell. Come join us on Twitter at the Crypto Love. Push that like button. Today, fear and greed at 50. I was wrong. I thought it would go down yesterday after that 4% crash. It stayed at neutral, which is actually kind of good when you think about it. Price goes down, sentiment stays neutral. Now, overall market sideways today. Bitcoin at 22,348, Ethereum at 1568, BNB at 290, XRP 37 cents, Cardano 34 cents, Dogecoin 7 cents, and Polygon $1.15. Now, Bitcoin right now sinking below the 50-day moving average, this yellow line right here. The last two times this did this, Bitcoin did go all the way down to the green line, which right now, the 100-day moving average, at about $20,000. We could be headed to those levels, especially when you see things like this. This is the new privately owned housing unit shared total units. Peaks in this indicator has systematically foreshadowed recessions. When we had peaks and drop, look at this, peak, drop, recession, peak, drop, recession, peak, drop, recession. Now it didn't happen right here, but 3 out of 4 times, not bad for predicting recessions. Also predicted this COVID recession back there if that was a recession. But Bitcoin, on the other hand, everything else is looking terrible. Bitcoin's looking not half bad. We just had a very, very interesting month. The February month has successfully closed above the 10 MA line on the monthly charts. This only happened in 2015 and 2019. This was the start of a new bull run for Bitcoin. We could be at the start of a new bull run for Bitcoin. As a matter of fact, if you see it here, when Bitcoin breaks trendline resistance, once that happens, massive parabolic bull run. It happened back here 2014, 2015, happened here in 2018, 2019, it broke that, and then parabolic bull run. Well, guess what? We just, with the last month of February, these are monthly candles, broke that resistance. Could be in for parabolic bull run territory. Now, people are like, but the price went down 4%. I don't know what to do. Well, it turns out a regular bearish divergence is turning into a hidden bullish divergence. So according to MACD, the regular bearish divergence played out. It's been turning into a hidden bullish divergence. Direction of momentum has changed, which higher highs and lower to lower lows, and highs to lows and lower lows right down here. So we have a hidden bullish divergence. Another way of taking a look at it, I think easier to see on this chart, is we have the highs here, hidden bullish divergence, important trend line right here. We have the RSI going down right here with lower lows right there, and that would be the hidden bullish divergence, suggesting that the price could go higher. Now, this is what happened in 2019. Similar situation. You have to think if Bitcoin has 4-year cycles, we could be having this happening once again. But almost exactly 4 years ago, we had the same exact type of thing, hidden bullish divergence thing. This is the exact same thing. It took Bitcoin from $5,000 to over $8,000 in 2019. That was part of the summer rally. So that being said, we do also, if Bitcoin is correlated to 4 years, if it's correlated to the halvings, we do have another pattern correlated to the halving shown here on the Heikin Ashi 2-month chart. Between each halving, Bitcoin prints a set of red candles to complete the macro pullback, as you can see right here, macro pullback. Then we have a price floor, and then it starts a new bull run. Now, it appears like we have created this floor once again as these Heikin Ashis have slowed down and turned into a green. The last few times this happened, the bottom was in, next top, $200,000 inevitable with floor at $100,000. That's kind of optimistic, but we'll kind of have to see. Right now, though, Bitcoin is proceeding as usual. We have basically fall down once it breaks through the 23.86 or 23.6 fib with a breakout in the Chan momentum oscillator and the Williams percent R that has preceded every rally for Bitcoin. Break the 23.6, Chan momentum oscillator, Williams percent R, massive rally. Well, guess what? Just broke the 23.86, broke the Chan momentum oscillator, broke the Williams percent R. All of these things are lining up. Why, oh why would this time be different? Because hey, if we are to break out like we've done previously, past times when Bitcoin broke through the Tenkin line, which is this red line right here, it very quickly went up to the previous all-time high Tenkin line, which if you take a look right now is roughly around $50,000. We could have a $50,000 very, very soon. And the best news is for everyone sitting on a sideline, Bitcoin is still undervalued. So despite what's happened, despite it going from $15,000 to $25,000 and wherever it is today, despite all of that, still at undervalued levels, below fair value, definitely not at overvalued territory. So that's all for today's episode. If you did enjoy it, push that like button. I will catch you later. Have a good one. Love you. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.